Manish Sonthalia joins us. He's Senior Vice President and Head of Portfolio Management Service with Motilal Oswal Securities. Manish, you are a buyer in Maruti. Would you agree with Sandeep Sabharwal when it comes to the underlying logic?
No, Nikunj, in fact, we have sold Maruti from our portfolios.
Maruti, my friend.
I think the corporate governance issues are serious. Yeah, Maruti.
You sold Maruti?
We have sold Maruti from
When did you do that?
Yeah. On the day the announcement on the Gujarat plant came, so that was the day when we exited Maruti.
So if you sold Maruti, what did you buy?
I think the corporate governance, let's leave that. We can talk about that later. I think, Maruti has some corporate governance issues. It's very easy to say that a reasonable rate of return plus cost of production will be shifted to the new plant. So how do you project the P&L for, after 2018? You will have to rely on the data that is provided by the unlisted entity, right? Because, the margins are comprised of two things, the production margin as well as the marketing margin. So Maruti Suzuki now remains as a marketing company post 2018. So, while everything looks good on paper and, things are expected to be good and ROEs would move up, etc., but this does not really speak very good about the corporate governance on part of Maruti. So that is the reason why we exited.
Manish, in quick time, Nifty has appreciated from levels of 6,000 to 6,200. Do you think we have a genuine bottom in place, or this is just a pop?
Because in spite of all the worries on the global front, Chinese slowdown, tapering, etc., where are we seeing the markets actually breaking down below 59.50? You have seen the markets just showing a fair degree of strength in spite of many uncertainties that are there. So I think if the markets were to break down, that will happen only post-elections. Maybe on the day of the results, it would be either a very big swing on the downside or a very big swing on the upside. In the run-up to the elections, I really don't see the markets really falling in a big way. In fact, of late, after the opinion polls are suggesting something like a 230 plus for the BJP-led government, markets are showing a fair degree of resilience. So I would think clearly, till about the election results, you should see that 59.50 should hold on the downside.
The big relief, of course, this morning is that despite a third front formation and such a strong one at that, the market is still lying absolutely quiet. You aren't quite seeing a knee-jerk reaction. But Manish, what happens if the third front wins the election? Could it spell disaster for the markets?
First of all, the probability of that happening is quite low, and if it was to happen that way, then maybe markets will see some correction from these levels. It won't be a disaster per se, because you'll have 11 parties coming and you'll have different opinions. So I really don't think it is going to be that disastrous. But yes, sentiments are going to get soured.
So Manish, what's the right approach from now up until the elections? And does it seem like the market would be range bound, or are you still hoping for a pre-poll rally, so to speak?
I think it's a clear case of a buy. If the markets offer you an opportunity to buy on dips, it is better for the buyer. But even otherwise, I think the markets are clearly on a very strong footing. You've got to buy the right stocks and the favored sectors and play it that way. I don't think there's a new thesis in the markets that something is going to turn out. Yes, there are stories about the e-commerce space. There's more work to be done in that space, or the internet companies, etc. So these could be new areas where one could look at, find some opportunities. But broadly, the thesis remains the same. I remain a buyer. I think the markets are on a positive footing till at least the elections.
So what's your March end target for the Nifty?
Very difficult to say all that, but I think clearly 6,700 or thereabouts is very much possible.
March end 6,700?
Could be. Run up to the election, not March end. Okay. Run up to the election.
So for markets to move up, you need either flows or you need triggers. For the moment, flows are slightly sketchy and triggers are just not there. So what will drive markets up? What will take it forward? What will push things up?
So I think, if you have slowing down of outflows from the domestic institutions, and I believe that's very much on the cards because, we have had a chance to interact with one of the larger insurance companies where the outflows that we have seen from the domestic insurance companies in the last 3 or 4 years because of policies getting surrendered or the product mix getting changed to traditional policies, you have seen heightened outflows from the insurance companies. All of that is now coming to a very reasonable level. The product mix has clearly changed towards traditional policies as well as surrenders are now showing some signs of slowing down. So I think the outflows, if they stop, markets will have its own momentum because FIs have been continuous buyers. So instead of buying 2,000 crores or 1,500 crores per day, if they even buy 500, 600 crores per day, if the selling stops, the floating stock in the market gets reduced, and retail is in any case out of the markets, and they will continue to remain out of the market till at least about the elections are over. So that dynamics could actually push the markets higher on a very low volume. That's very much possible.
So Manish, what's the right approach? Stay put with the consistent performers, the likes of IT, pharma, select auto, perhaps now auto ancillaries, or bet big on spaces which would do well if we do have a strong government on the top, capital goods for instance?
No, I mean, capital goods, infra, even this quarter numbers, the last quarter numbers, December quarter numbers, we really haven't seen too much by way of positives coming out of the capital goods numbers, except for the order book position, which has seen and has shown some signs of bottoming out. The margin picture is not very clear, particularly so for mid-cap companies, the capital goods space. But large cap like L&T and all have shown better margins and decent margins. So I think the space is not out of the woods. Whether you want to take a call on that space before elections, I would give it a pass. Wait for the elections, see the formation of the new government, let the business confidence come through, and then maybe try to nibble in through the good ones in the capital goods space. But I think I would just stay with the consistent performers, try to find out some new ideas within these internet companies or the e-commerce space, etc.
Last time I remember we discussed Page Industries extensively. I was looking at the Q3 performance and they're doing all the right things. So are you happy to still own Page Industries? Because this is a core holding for you. This holding has worked for you, but the valuations are looking slightly stretched.
They always were stretched, Nikun. So what we are doing is that because of the up move in the stock prices, the allocation has become bigger. So we are trying to just tinker down slightly the allocation per se. We are not exiting the stock at all. As long as the numbers keep on coming and our assessment of how the numbers are going to shape up over the next 2, 3, 4 years, we are happy to own that stock. It's only that a bit of asset allocation tinkering could be done.
You've been hot and cold on Tata Motors. How big is the China fear for Tata Motors? China is an important market for JLR, but so far there is no evidence that JLR is losing market share in China. Do you think every decline in Tata Motors because of the China fear is a good buying opportunity?
I mean, there is something about JLR with the Chinese like a lot. I mean, it's got a very strong product pull, and as far as the volumes are concerned, absolutely there is no concern. I'm more concerned about what sort of a cash flow position would come through, because you need constant product innovation and a lot of money goes into the capex, both on the R&D, and they have some heightened capex coming through over the next 2 years. They're going to build their China plant, which is coming up in the next year. I think the P de-rating could happen on account of free cash flows, and even for the 9 months of this fiscal, you haven't really seen any free cash flows for Tata Motors, in spite of very strong numbers, very strong margins. So I think we are closer to at about peak margins of 17% or thereabouts, and post that it would be a volume play. And obviously, if China slows down, it will have a rub-off impact on all companies in the automobile space. Yes, I know that the top end of the market, which is the luxury segment, doesn't see too much of an impact in spite of slowdown anywhere in the world. So that cushion is there for all the luxury car makers, BMW, Audi, Mercedes, etc. And JLR would have actually also fit into that space. We got to see how they fare on the market share. It doesn't really look like that they're going to lose market share in a big way, but post the commissioning of the new plant and the new product launches that they're going to have will determine how the outlook on Tata Motors will be. But I think domestically things are very bad, and if you look at the numbers, it should be on a consolidated basis. But having said that, in keeping that point aside, it is more about not very good cash flows on the company that I don't really want to own Tata Motors at this current point.
Manish, what about the two-wheeler space? Bajaj Auto, of course, of late has been having some export issues, but besides that, Hero MotoCorp tends to be the biggest beneficiary, at least according to most market men, when it comes to the excise duty cut. What is it that you like?
I think it's more a case of being more positive on Hero MotoCorp rather than Bajaj. Bajaj is having some issues as far as their domestic sales are concerned. Exports are also not really showing that big a traction in spite of currency being favorable. So they have some internal issues to sort out as far as the products are concerned, because there are very few products. Yes, they are moving to the executive segment with KTM and the luxury biking market. But I think Hero is doing all the right things. They are having the product launches. Margins are shaping up very, very well, and come 2015, which is June 2014, you're going to see savings on royalty. And in spite of the markets knowing the fact that there's going to be savings on royalty, that aspect is really not factored into the prices, I would think. And adjusting for the royalty part, margins are at 17% for Hero, and that's a very good margins. And it's just about the economy picking up slightly and two-wheeler as a space gaining some traction. I think Hero MotoCorp can just fly.
So, Manish, you don't like Maruti, or you've sold out of Maruti, you don't like Tata Motors. Can I safely assume that you're buying Hero MotoCorp then?
I mean, a few names that we like in the auto space, and we have been continuous buyers in those names is Bosch. We like that space, and we are buyers in that space. We like Hero MotoCorp. So yeah, I mean, the allocation which has gone out of this space has moved slightly into the pharma space and slightly into the existing auto names.
Manish, what is it that you've made of the CERC regulation of late, and what it implies for names like a Tata Power or NTPC on the flip side?
Well, I think, what the CERC has taken into account is the force majeure clause. If the contract is not being able to be fulfilled just because there are certain aspects which have gone out of control, or it is through act of God, that the cost of coal has really shot up by 150% over the last 2 years, and the whole cash flow dynamics and the PL dynamics of power produced out of that coal has resulted into negative NPV. CERC has said, okay, we'll give you a leeway so that you make some reasonable return on capital employed there. But I don't think it is a blanket case of tariff being put up for an increase just because you have gone wrong on the currency, or diesel costs have gone up, etc. Those aspects won't be taken into consideration for CERC. So yes, it is favorable for Adani or the Tata Power, but at the same time, the discounts will have to shell out more money. Where are they going to get more money? Like in the case of Adani, that 4,620 megawatts, you have a PPA agreement with Haryana Discom. So now Haryana Discom will have to pay something like a 350 crore, etc. extra. So whether it's going to be challenged, maybe it will get challenged, but whether it would stand in higher courts, I have my doubts, because PPA agreement clearly says force majeure clause can be invoked and redressal issues could be